Good morning, everyone, and thank you for joining us on Morning Markets. What I wanted to look at today was just some data from the US yesterday, specifically the Institute for Supply Management, and how that related to the ongoing strength that we continue to see in the services sector. Over the past number of months, we've continued to see readings above 50. There was some expectation yesterday that we would see a slowdown to around a 53 reading from the 54 in October. Actually, we didn't get that. We got a surprising increase in the overall measure, so an increase in the confidence and also in the activity measures. And that's despite what we've seen in recent months in terms of rising interest rates and the impact that that should have with a lag on the economy. But let's just look at some of the data points within that survey yesterday, because I think there are some interesting trends on which to reflect. Primarily, that we can see supply chain constraints, that challenge that has been really something all businesses have been dealing with post-COVID, continues to improve. Inventory levels continue to decline. The one sort of challenge within the data was inflation, and that inflationary trend continues to remain a challenge, albeit easing from some of the higher levels that we saw earlier in the year, but still there as an issue for businesses. I think the other thing that we also can take away from it is just the ongoing strength in the employment situation in the US. We know that we've got a record low employment rate at 3.7%. We have seen in recent weeks a bit of an increase in layoffs coming primarily from the technology sector, but really that's a small part of the US economy. That broader US economy is certainly not seeing very significant changes in employment at this point in time. We did hear from the Business Roundtable, a lobby group in the US yesterday representing industry, and they did continue to really talk about the challenges that businesses faced on the employment front, their ability to hire, wage inflation, etc. Interestingly, just tucked away in the data, some members did indicate that over the next 6 months they might look to reduce their overall headcount, but that was only around 20-25% of the respondents. So something to monitor, but clearly something that we're not seeing coming through in that broad employment data that Paul discussed yesterday, that when we saw the US employment report on Friday. And I think really this really highlights the challenge that central banks face at the moment. Ongoing strength in the economies, the lagged effect of the increases in interest rates coming through and the tightening of monetary policy. Remember, as we started 2022, we had a US interest rate of 0.25%. We're now at 4%. That will work with a lag into slowing the economy, certainly into 2023. Also just wanted to touch on a bit of data closer to home. We had the British Retail Consortium data for November, indicating sales growth here in the UK of some 4.1% year on year. Difficult to read too much into that because clearly we do have the Black Friday sales within that, which will certainly skew the number. Also worth noting that it is in value terms up 4.1%, but if we think about the inflation backdrop that we've got, certainly volumes would have declined over that period. I'll leave it there for today, but please do join us again tomorrow. Many thanks. If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.